Hey, it's Mack with PriceActionTradingSystem.com, and it was a really good trading day. We had a really strong sell-off here, and then a pretty nice bounce. Most of that move was late in the afternoon, though, with about a 50% bounce. But it looked like it was going to be a trading range early on, and we just broke down from there, and we were off to the races here. And you really were better off, even though there's a larger two-tiered channel working down here, you were better off using these shorter term. They pretty much kept you on the money. So I liked using them. But you can see the range working across and then the sell off. And of course, we got back up and closed right at the lows of the previous range that morning. And actually, once we started going lower, you probably would have wanted to be looking for at least a measured move. You can see that there. And that would have put you right down here in this area. And we went a little bit lower than that, not a whole lot, but we went lower than that. But that would have given you a nice target, and you can see that did act as kind of a midpoint because once we went below it, we were working on it as almost resistance there before we finally pushed through and then came back and went higher. So, but let me back out and we'll talk about the trades, and I'm gonna try not to do a 40-minute one today. So. Um, I want to get out of here. There's a ball game tonight I'd like to see, so I'm gonna try to get out of here pretty quickly. But anyway, we were working up when I came in. You could have seen this a couple of ways. There's a bigger channel here, but there's a shorter term one that you could get right off those first few bars, and you see it works right up through there. If you copy that one, you bring it. You can kind of actually there's a midpoint on that there. You can see it was two tiers, so you could have seen it either way. This is just a shorter term one within the larger one. It got you to the same place. You still get your break here. Um, it might have led you to take this long uh, right here if you saw this one, because that's a pretty good break, and you know you're probably going to try to retest those highs. So you still could have seen this long as a second entry long, even with the other one, and then it's right off the key entry point. But it's just not a very good signal bar. It's right at the 7 o'clock hour. It probably should be green because you might let it break higher and drop a limit order in there. But I think you're better off to wait on a second entry counting off this low. So wait and see if you get a lower high and then go long. And you do get that here. Again, it's not a great signal bar. So again, I would have let it break higher and then dropped a limit order in there. And you see you could have gotten filled all the way back down right at the EMA if you did that. So I think you're better off to wait and enter there. Again, I probably should, this first one should probably be green. But if you do want to be aggressive there, the only way I think you can probably do it and be smart about it is to let this break higher and drop your limit order back in a few ticks. And you could have gotten filled pretty far back into that bar. Um, and that way you get a little better entry. It would have worked no matter what, but it's just not a great signal bar. But notice you got one leg, then you do have your break of your little trend line here, and then another leg down. So, and this is actually really probably a little steeper than that, probably more like right along there. And you get a close outside and a new low. But this is your better trade. Easy scalp. You don't get anything else out of it, really, unless you exit your runners right up here near the resistance. You can see that resistance working right across there. I like to use the closes so you get more touches following the close. You can kind of see how that one's working on the upper side there. So I think it fits better there. And then you have a huge sell-off. I don't really see a good way. You could treat this like a little breakout pullback, kind of short there, but I just don't see a good way to get in that. You can get a trend line off those first few, but you don't really get a chance to enter until way down here. So I just don't see a good way to enter that one. It's one of those you just have to sit there and say, man, what a great move. But, you know, and don't let it shake you up because you didn't get any. But it comes right back here and gives you a good chance to enter, and then right back here. And notice you got a trend line working up right through there. You get a break, tries to move to a new high, it turns down right off that trend line. And the reason I started my trend line here is because that's really where the downtrend started. So it didn't, we were still working higher here. This is where the downtrend kind of started. So nice entry here, quick, easy move. And then you get another correction. And look at that trend line. You get a close outside, move to a new high, and look at that big bearish bar. Go short right there. And that's the first break of this one. So we're looking for a pretty good move down here to test that low. And that thing almost does it all in about 2 bars. And then it turns higher and turns back down. So you get a second entry counting off the high, but it's right into the double bottom. And I don't think you want to do that. So if you didn't enter here, you just had to watch this one. But now you got your break. You're all the way down here to a new low, and look at your support back across here. And it bounces right there. And look how far away you are from the EMA. That's a second entry long too. Look, pull back first entry, pull back second entry, and it's basically a perfect measured move. Go long right there. Most of the time that would probably be green, but I don't even see that one being green at this point. You're pretty sure to come back to that EMA, and then guess what? It comes back, it pulls back, it snaps, and it tries to go higher. And you got a trend line working right up through there. And there's a second entry long counting off this low right here. But I think you need to wait until you get your failed second entry, your reversal type pattern, and you get that here. So this looks like this is going to be a reversal. And notice how I drew this one in green when normally that would be blue, but it went lower first and turned and went out the upper side. But you don't have much room back to this double top right across here. There's a double top running right across there. So I was a little bit, and this was a pretty strong move down, so I was a little bit concerned about that one. And you can see that resistance working across there. So I think it was a little aggressive entering in this one. You get just enough to scalp out there, and if you couldn't, you'd have to use a limit order depending on what your chart looked like. But it's a quick, easy move, and you don't get anything else out of it. It's tempting to go short. You need to wait on a little better entry. Technically, you could treat this little double bottom, 2 matching lows here as a second entry, but you're kind of going sideways here. So I don't like entering there. It does run down and test that low, and you don't really get another chance to enter, unfortunately. So you're just kind of watching it. There's kind of a range across here, and you can see it's more resistance than it really is a range. And we're just kind of going sideways here. We are making higher lows though. So notice what happens here. You got a new low, and then you basically got another new low here because this low is lower than this one. So, and you made a little bit higher high there. There's a trap here, but because that ended as such a neutral bar, I don't think you want to go short there either. But when we make a higher low here, it's tempting to go long. You really could go long there, but I think you're better off to wait on the second entry. The second entry comes right here, but notice how bearish that bar is. Not a very good bar. So wait, and then you get that little failed second entry short, and but your first break higher is this bar. So I think it's okay to enter right here based on the trap and the failed second entry short. It's really sideways by that time. There's a lot of bars, so even then, if we weren't making these higher lows, I'd be a little bit concerned about it. But because it's a trap and we are looking for prices to go higher here, I'm okay with it. It's good for a scalp, and then guess what? It pulls back, and by that time you can see that support across there. That's like a little failed break lower and a nice bullish reversal bar. So I like entering again, looking for it to at least come back to here, but this thing just takes on off this time. And then notice you made another swing low right there. And you get a first entry short, a second entry short, it fails. And look at that bullish bar right off the trend line, right off this line, right off a possible shorter term trend line. I got that by drawing this line off those tops right there and dragging it down. You can see it does confirm it right here. But that's a nice entry. You didn't get that little tick back here, so I was hesitant to. This is not really a failed second entry short here. It looks very similar. It's close enough you probably could trade it as one. So I'm willing to make it a green. But you just don't have enough. There's not much room between there, and those will fail on you sometimes. So you got to really know. Make sure you're reading it right, and even then it could still fail. So I'm going to make it green because it's aggressive. But you see what happens sometimes when you take those aggressive trades; they really pay off. Um, but you got this shorter term one working up, and now you get a close outside, a move to a new high, and you're headed lower. You really got a trend line working right across there. Probably a little bit flatter. See how that didn't quite fit on there real good? So draw it to where it fits on there really well. Erase it, then copy that one. And that's more your, that's going to be more your line right across there. And you really don't get a close outside of it. It's right at the line, so this channel is good. So you got to be careful going long here. You might consider that a slight close outside, but anyway, you got the bigger channel working up here, and even though you got a push outside right here, it was early on when we were going sideways, so you're probably going to get another test of that. So when you got this little trap right here, notice what happens. You got one leg down, first entry, second leg down, second entry, and that's two measured legs. But notice you got those two little bars, and it drops down right there and then turns back up on that little bullish bar. I like taking that long, hoping for prices to at least get back to here, but maybe go higher and retest that high. We do go back to here, and it pulls back, and so you wouldn't have got any more out of it. But then it pulls back again, and you get another little similar trap right here. Notice that little inside bar, and it tries to go lower and turns back up. Just go long right there, because that's like a repeat pattern. It's almost the same pattern as that right there, and I like that one. Again, it's good for just a scalp, nothing more. And now we're kind of going sideways again here. And you notice you draw these lines. I don't always have them on here. I can see this stuff now without them being on there, but until you get really good at seeing this stuff, I would always draw them. And so you can see we're going sideways again. Look how the EMA is sideways. We're swinging back and forth above and below it. And you get a little breakout pull back short right here. Notice how we drop below when we pull up, and it hits right at the EMA and turns down right there. I like going short right there below those bars. And you got that trend line working right across there. And this kind of confirmed it basically. And look at it, down it goes. I ended up adjusting this later on a little bit higher there. But of course, draw this trend line too. But you really never get another chance to enter. There's a little break higher right there that you could say, hey, you got a failed second entry short here, but it's right into that previous support, so you can't go short right there either. It would have worked. It does pull back under and give you a breakout pull back short, but now you got a slight close outside of that trend line, and you don't want to go short right here with only two ticks to the low. It does work, but you can't risk that. So your only entry on this short was right here, and you might have even thought about right here because it's really a failed second entry long. You could treat it like one. It's a second entry short. There's a double top. It probably confirmed that trend line. It's not a real bearish bar, but you might have considered entering there. That one's probably should be green as well. Personally, I would have waited and entered here on this little breakout pullback short and the lower high and the big bearish bar. And it actually went out the top and turns, it goes right out the other side. So you could have gone short there instead of waiting and going right there. Either way, it gets you in that move, and you can ride that all the way, all the way down for the most part, because the first bar that closes outside is here and you never really got a break above it. So the next one's here, and you put your stop right above that, and you would have got stopped out. So that's a pretty nice move. Then we're working up, and when you start getting these corrections here, you want to draw your trend lines up, and you don't want to go short until you get a break below. Notice there's a second entry short right there. New low, pull back first entry, pull back second entry. But look at my signal bar, not very good. It did go higher first and then come down, but we just came off the low. So unless we get a almost perfect setup here, you want to hang on till it gets back up to here, or until you get a trap or something. And you never really get a trap here. You just trap people to the short side, really. You actually could have considered going long there, but that's right into that previous support. It's now acting as resistance, so I wouldn't go long there either. I'm waiting for it to get a break of this, and then a trap or something, or a good setup. And notice we do get a break here. You make a little push lower and you turn up. It's tempting to want to go long there, but again, you got to wait, because this is a big downtrend and you're not back to the key entry point. It is right at the EMA, but you don't really have a good setup there. That's a kind of there's a bullish bar on the way back up, but you don't want to be going short, and so you got to wait on the short. And so you get a second entry short here. That's a fairly bearish bar, but the main reason I like it is it's a failed second entry long at a spot you don't really want to be going long because of that resistance right there. And so notice this new high, pull back first entry, pull back second entry, and it only goes a few ticks and turns down. Just go short right there because of the trap. Without that trap, I wouldn't go short either, though. And off it goes. And again, you don't really get another good opportunity to enter this one until way down here. It does break higher and you get a big bearish bar right there, but you're going low right at the lows and right at into a little double. It created a double bottom with this bar right here, so that's risky. It works, but if you're in here, you can ride this all the way down. If you wait till the first close outside where a bar breaks higher, it's right there. And if you traded it that way, you get 9.5 points out of that one move. So you don't have to enter again. You got to enter at the right places, and don't try to chase it once it starts moving. And guess what? Just like right here, you get another. It's almost a repeat pattern. It doesn't quite get back up there again. Tries to go higher twice. You get the failed second entry long right there. It goes short. And this market, when you can't get back to the trend line and you keep turning down, that's telling you the market is really, really weak. And you get the failed second entry long right there. Just go short. And it backs up pretty quickly. It's tempting to want to add on there. I wouldn't add on right there because it's starting to go sideways at that point. You got a few dojis and things in there. You are making lower highs every time. That's your key. Even that's a lower high. So that's your key. You're probably going to drop on off here. But you got to be careful. You've already got one contract on right here on the failed second entry. So you don't want to load up and be wrong here and it going up to the trend line. If it was at the trend line, I'd say load it up. But right there, you got to be careful. However, when it breaks a little lower here and turns back up, and then you get that big bearish bar again, if you hadn't scalped out yet, add on right there. If you have scalped out, jump back in right there. Because when it made another lower high, I mean, the odds are it's probably headed to the low end again. And that's a big bearish bar. Look at that thing go. It does pull back to the trend line there, but again, you got to go short at the low of the day there. Comes back again, same thing. Those are worth considering, but you got to be careful because you never know when one of them's going to fail and you're rocketing off the other direction. You got to enter at the right places. And then guess what? We come back. Now this one's a little different. Notice what happens. You're coming up. You don't get a break of this trend line here, but I still like this one simply because now we're at the EMA. We're at the right at the EMA. We're right at the midline, and this thing has been really weak. So second entry short with that bearish bar, I say you risk that one, and it's probably going to at least test that low. And it could just keep going lower, but it does. It makes a new low and then it heads higher. And plus, you're looking for a new low already because of this. So you were looking for this to come down. That's another reason I like risking it right there. And this has been a pretty strong sell-off. So, and then of course now you're bouncing again. And look what this is, probably two-tiered, but this could be an overshoot. I'm guessing. I never really drew the other line. Doesn't matter. It's probably just, you can see it's just two-tiered. But you're moving up, and now this is the first time we've come back to this major trend line. But I like this one because it's a second entry short. It's a little failed break higher and a big bearish bar. Notice you're moving up. First entry short, pull back second entry short. Plus you got that little resistance across there. And that's a little failed break higher and bearish, real bearish bar. So I like entering that one even though we don't have a break of the trend line yet. You see what ends up happening. It ends up bouncing. That's why you got to be careful with that. But there's an entry right here that I forgot to circle. And now you got your break. Two legs up to a new high. Little bitty three tick bar right there. Very low risk. A good ways away from the EMA in a very weak market. That's where to go. And another key here, reason why you might have skipped this one, even though it worked, is notice we came up short right here. We did touch it here, so you've already had your touch, so it doesn't surprise me we didn't touch it again. But when we didn't touch it this time, there's a chance you might get a break here. That's, if you overshoot it, you may overshoot it, or if you undershoot it, you could overshoot it. So that was another little clue to be careful here. But I actually treated this like an overshoot too, and generally a lot of times you don't get a retest on an overshoot, but we did here. But looking at it after the fact, I don't think that was an overshoot. I think this was a midline here. And that's why sometimes, you get to thinking you're reading it real good and you're wrong. In this case, it still worked out because I was reading this like this was an overshoot, and so we were going to take off lower from here, and guess what? We get our first close outside the trend line, and we still make our two legs up to a new high before we take off. In this case, we hadn't been back to that key entry point so long that I was probably getting a little. Looking at it after the fact, that probably ought to be green. I think I'm just going to change it. I think I got lucky that I didn't bounce on me there. So I'm going to change that one to green. There's still reasons to like it, but it's a little more aggressive because I was looking at it a little differently earlier, but after the fact, I see it slightly different now. This was the better place to enter. And guess what? If you entered here, you got a runner that rode this thing all the way down. And you just, days like this, you got to try to catch runners when you start to get these big moves. And so if you catch that one, there's a second entry short counting off the high right here. But that's a horrible signal bar. It's right into some resistance there. Everything's still closing above the EMA. You kind of came back and tested there and went lower. But I think you need a better correction than that. You need your failed second entry long. And so then you get another leg down and you get your second entry long here, and then it turns down. What you probably wanted to do, you could have done this two different ways. You could have waited on a break below that bar and dropped a limit order back where your stop should have been, because that's not a very good signal bar. Or you could have let it break below this bar and then actually, let me take that back. You could have let it break below this bar and dropped a limit order back up in here to get a little safer entry, or let it break below this bar and put your stop back up here where it should have been here. And you see you could have actually got filled maybe a tick or two back into that bar, and then it takes off. But that's a trap there, so this doesn't have to be a perfect signal bar. I mean, you almost could just put a stop there, but because it's such a bigger bar and it's a little more risk, I would try the limit order there. But it is a trap, and so you really don't even have to use a limit order. You could just use a stop there. But if you're going to enter on this one, you got to use the limit order because you're right into that low there. So a couple of different ways to enter that one. And it does give you a little breakout pull back here, but that's not a very good signal bar. This one's too big. It's right into that support area again. It does push on through. We just kind of go sideways and drop down. So you don't really get a chance to enter it. There's another second entry short here. No break of that one, but because we got a break of this bar, the main channel now, you can see that's the first break of it. First close outside, and you've got a new low. You got to be leery of a possible reversal here. You may get another move down. Wouldn't surprise me that we test this low again because this has been a big sell-off. So, but follow the rules on this trend line for sure, and make sure you're at a key entry point. And so notice you're moving up. You get a second entry there, big bearish bar, and it would have worked. It works, but I wouldn't take that right there off that trend line because that's your first close. Then you make your new high, and notice how it breaks higher, and then you get that big bearish bar right off the resistance, right off the trend line. Just go short right there. And because your stop still has to go above this bar, so you might have let it break lower and drop a limit order, and you see it would have come all the way back to the resistance area and filled you before it dropped. And so, but you could have just entered that with a stop if you wanted to. You would have had to sit there and struggle to ride that out, but your stop should be up here. Even though that's your signal bar, your stop has to go above the swing high, so right there. Turns out to be a great trade, but it takes a few minutes. And then, of course, now we bounce. You don't get your trap until here, and so I think that's way too far away from the EMA even for a trap. So don't take that. Just sit there and watch it. And of course, we just start going sideways. And this is just a channel going sideways. You can see that. You don't want to enter in that. It's really tempting to enter here because it's at the low. But if you did enter there, you would have gotten trapped, and you see it drop down. But I think you're better off just to sit here and wait and see if there's something else going on. You notice this line, you could draw off of this over here, which is like so. But it's not enough evidence there to really give you any clue where this, and then when it shoots right past that, you don't even know that doesn't even look valid. It turns out it is later on, but you can't see that right now. So I think you need to wait and see what happens here. And when you get that big drop and it drops below that double bottom and comes down here, you're at least coming back to the EMA. And instead, this is one of those times where you catch the low of the move and it takes off. I love those setups. You'll see them quite often. Just like this one here. This was the low of the day. And if you caught that, your runners would have been good and you could have ridden this all the way up. I don't like entering here because everything's still working lower. Here you're making a higher low and you're at least coming back to test this breakout in this EMA most likely. And so this one's a little better choice compared to this one. And you definitely have your trend line off those first few there. So draw that one. This turns out to be a shorter term one within the larger one. And notice what happens here. You get first entry, pull back second entry. Actually, I didn't like entering above that one. Even on the second entry, it's like a breakout pullback long too. But when it pulled back and couldn't go below that bar and made the little double bar, double top there, that's like a second entry counting off that low. So I liked it. It's really a second entry either way now. And this thing takes off again. And plus, when it breaks higher here, it's bounced right off that trend line. And that's the main reason. It's a key entry point. And look, and you get a little breakout pullback long here, but I think you got to skip that. But if you caught either one of these, you can ride this right into the close almost. You highest point would have been here. I probably would have exited when it broke here. I might have even exited when it started after it touched the top and started working back. But that was your last entry into the 2 o'clock hour. There's a second entry long, and that little repeat trap again right there. If it wasn't after 2 o'clock, I'd say take that one as well. That would have been a good spot. And there's a little failed second entry short right there, and you could have added another one. So, but this is your 2 o'clock cutoff. I usually don't mark anything after that. So, a really good trading day. Um, it was all these first trend lines were real straightforward. You had to enter early. You couldn't find good entries further in them. So I hope that's clear. You got to enter on the correction, not once the trend starts moving, because if you really knew where, if you really were reading this properly and you knew this trend line was down here, as weak as this got, I probably would risk entering in some of these pullbacks to these shorter term trends down through here, because you know prices are probably heading down to this line. But you better make sure you're reading it right if you're going to do that. And I'm not going to mark them, because people will be trying to do it and they'll read it wrong. And just like I got an email from a guy today, and he was reading the chart really well, thought he was, and then he lost a bunch of money. And he wrote back and says, I got all messed up today. And he got overconfident. I mean, based on some of the emails he sent me recently, I know he's way overconfident. He hadn't been doing this very long, and he's gotten 100% better, but he's still got a long way to go. And that's the part he has a hard time grasping, that I keep telling him. And I keep telling him not to risk his real money, because if you can't, if you think you're ready to trade live, get you a sim account, put $5,000 in it, set it to $5,000, and see if you can double it. Trading properly, following the rules. Don't lie to yourself. Don't double down and hang on to it till it comes back and stuff like that. Stuff that you couldn't do with a real account. And when you can double it, or even triple it, then you've done something. Then you're probably ready to give it a shot live. But if you can't do it on a simulator, don't fool yourself into thinking you're going to do it live, because you're not. And you just have to understand that the people that you're trading against are very skilled and very good at this, and they're going to take your money if you're not good at it. So keep that in mind. And I said this was going to be shorter today, and here we are, 32 minutes. So lots of trades today, a lot to talk about. But I'm not going to drag this out any longer. I'm going to wrap it up. This is going to be it for the week. No chart lesson tomorrow. We'll be back again to do it Monday. And actually, just a heads up, I'm probably going to take a couple of days off next week. I'll probably trade Monday. But next week is spring break here, and my kids are going to be out of school. My son will be out of college. My daughter will be out of high school or out of school. And so I'm probably going to take a few days off and enjoy some time with them during their spring break. So, but anyway, I'm going to wrap it up for today. We'll be back again for sure on Monday. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.